Hello and welcome to HiWayFX market news for February 1st, 2016. The Euro-US dollar pair finished the first month of the year near the mark of 1.080. The euro struggled for traction after the Bank of Japan adopted negative interest rates, heightening expectations that the European Central Bank will ease policy too. However, the upside remains capped as markets remain cautious ahead of plenty of risk events from both continents in the week ahead, with the most inflation payrolls data from the US eagerly awaited. On Monday, during the European trading session, we were observing a technical rebound. The Euro-US dollar pair rose to the level of 1.085 by adding 0.2%. The key events for the Euro-US dollar pair for today are US ISM manufacturing PMI at 15 GMT and speech of European Central Bank President Mario Draghi at 16 GMT. The resistance levels for euro are 1.0891 and 1.0945. The support levels for Euro-US dollar are following 1.0848 and 1.0752. The Australian dollar-US dollar pair fell on Monday with a mixed manufacturing read out of China as well as an unexpected dip in services deeming sentiment. Currently, the Australian dollar-US dollar pair trades around the level of 0.7060 with 0.25% loss. As Investing.com reports, in China, the semi-official manufacturing PMI for January reached 49.4, missing the 49.6 level seen and remaining in contraction, and the cakes in manufacturing PMI index came in at 48.4, a bit above the expected 48.0. Figures above 50 suggest expansion and those below, contraction. As Bloomberg noted, the Australian dollar's plunge to a 7-year low is turning out to be a blessing, as China steers its slowing economy away from the heavy industries that helped fuel a mining boom down under. It's more than 4 years since a record-high Aussie threatened to destroy manufacturing and hamstring the economy. Instead, the currency's steepest 3-year slide since it was floated in 1983 is working its magic. A weaker local dollar has spurred record tourist arrivals and education income. And it's tempered the drag from iron ore's plunge to unprecedented lows while making the nation home to the world's lowest cost miners. Australia stands out in getting the currency boost it needs at a time when economies the world over are grappling with exchange rates considered undesirable. The Aussie is in line with economic fundamentals after being 25% or more overvalued in 2013. Meeting of the Reserve Bank of Australia on Tuesday will focus on traders. The central bank will announce its decision regarding interest rate at 03:30 GMT. Analysts expect that the Reserve Bank of Australia will leave the rate of the level of 2%. However, during releasing the data, a high volatility with the Australian dollar is expected. The resistance levels for the Australian dollar-US dollar pair are 0.7153 and 0.7198. The support levels for the Australian dollar are 0.7040 and 0.7028. Oil started a new month of 2016 year from losses. This morning, the crude oil was trading below the mark of $33 by losing over 2%. As Reuters reports, oil prices dropped on Monday after China and South Korea posted surprisingly weak economic data, while fading prospects for a coordinated production cut by leading crude exports also dragged down the market. Economic data from China showing its manufacturing sector contracted at its fastest pace in almost 3.5 years in January added to worries about demand from the world's top energy consumer, at a time when the market is already weighed down by a supply overhang. Numbers coming out of South Korea were also gloomy, with the country's exports down at levels last seen at the height of the global financial crisis in 2009. The resistance levels for US crude oil are $33.80 and $35.10. The support levels for the oil are $32.50 and $32.05. Stay up to date with all the key financial news around the world by liking us on Facebook, following us on Twitter and Instagram, and subscribing to our YouTube channel. For more information, please visit our website www.HiWayFX.com. Thank you and have a good trading day.